What's up, everyone? It's Phoenix here. I'm actually rather bullish right now, mainly because sentiment is piss poor on Twitter, and that's very easily discerned by the engagement on my posts and other areas of Twitter and just the level of negativity that's been spewing around lately. But also looking at technically speaking, we are holding above the 2024 mid-range, and we have tested it not once but 3 times now. And it's pushing back up with some momentum, just like it did this time here. Unfortunately, last time it really didn't see the follow through that we were hoping for. But I think that especially if S&P continues to push back up, which I think that it's quite possible given the macro circumstances, we are headed into an election. We have the rate cuts coming up. They want to keep the waters calm and cool. They want to basically, recessions don't hit when everyone thinks that a recession is going to hit. Recessions hit when everyone thinks that everything's cool and we're headed back up again, okay? And so in order to create that illusion, what needs to happen? A strong bounce. And that bounce is not, I'm not just talking about it bouncing to 62. I'm not talking about it bouncing to 65. I'm talking about a bounce that could go straight up towards 73, 75. Okay. And that is not going to likely happen right away, but it could happen over the next couple of months. And I've been talking about this for many months now. It hasn't happened yet. Why? Well, think about this for a moment from the perspective of smart money. Every single time it comes up here and rejects, more shorts pile in. And what that does is it adds more liquidity at these levels. And so that means that there's billions of dollars in shorts right now at these levels that are waiting to get liquidated, okay? That's not so much the case down here, okay? Of course, there's going to be shorts down here, or sorry, longs down here, but not nearly as many as what we're seeing up here because the price action has had time to accumulate up here, okay? And so I would not be surprised, especially after today's price action, we could get a close anywhere around 57K. That's actually quite bullish for Bitcoin. And usually these moves, they initiate when nobody is paying attention. It goes to 75K, and then you guys can revisit this video and think, oh my God, he was right, and I'm too late, okay? And then it goes 75K, what happens? Max pain, shorts get liquidated, bulls come raging back, seeing, see, I told you so, now we're headed back up, it's the move back up, and it's a massive bull trap. And then it comes back down again, and then it goes all the way back down to the mid of the 2021 to 2024 range, which is sitting at around 35K, okay? $35,000. I would not be surprised to see this. And that's something that I'm actually willing to position long in this scenario with the anticipation of more upside. And here would be an example of exactly what I would do, okay? Making this simple. Where would our stops be? Somewhere at or near or below the 2024 mid-range, okay? In this case, this is a tighter stop loss, 6%. If it does come back down to this level in the coming days, then likely I'm wrong. And we're going to not only retest the mid, but head lower from there. I don't think that it will. I think that it could hold here and push back up to minimum target 62,460. And then from here, this, you notice, this is a 2-hour trade just to these highs here. And what do we see on the lower time frames? We see that it is potentially recapturing this choppy, messy range here. Initial rejection, sure. But now, if it starts to hold and consolidate here and then pushes back inside, well, guess what? Not only will it run these highs, it will run these highs as well, because that's how deviations work. That's what this deviation did. Ran these highs, came back inside, came all the way back down again. Okay, so now we could see a reverse scenario. And not only that, but instead of turning around again here, it could run higher. And these would be the next logical targets from there. And so this actually, from a risk reward perspective, is not a bad setup right now. If you see here, this is a 3.5R from this position. And like I said, this is more of a swing setup that I'm sharing with you right now. And this could take days or weeks or even months to play out. But still, 3.5R, depending on how you size it. And of course, I wouldn't be leveraging up on this, right? It's a 6% stop loss. It's not, you're not going to be using 20x leverage. Maybe 10x leverage if you know how to use my position sizing spreadsheet or you know how to calculate these things. This is not financial advice. Most traders are going to end up losing money doing things like this, and that's fine. I'm just sharing with you my perspective here. I think that the downside is quite limited, especially after these 3 failed tests. I was hoping that it would come down lower from here. I had some bids down around 51,700. It never quite did. It came back. It reacted pretty strong, even though it wasn't an immediate reaction like last time. It never revisited these lows that it put in here. And so that to me, and it's been, you notice this grind upwards here, and then this big push up, even if it comes down, back down to 56K from here, which is quite possible given that it just pushed all the way up to 58, it could come back down to 56, start to settle here. It's still not disqualifying this general uptrend that we're seeing. Okay, and we're seeing a new structure on the lower time frames being put in. So just keeping it really simple with you all, I am leaning more towards the long side. I'm leaning more towards the 73, 75K argument in the coming months, and we'll see how it plays out. So I hope that you found this video helpful, and if you did, maybe give it a like, share some love in the comments, be one of the people that actually engages with this video. Thank you for joining.